Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're talking Cardano's ADA, taking a look at what's been going on most recently and what we'd expect to happen and all that kind of good stuff. As I get into the video, you know what to do if you find it useful and informative. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell and you'll stay up to date with all the videos and streams that we do here. And don't forget to join us down in Discord. We cover a lot more down in the Discord server than we do here on YouTube, so well worth checking out. It's completely free and I don't think you'll be disappointed by what you find down there. Okay, let's get into this then. So basically Cardano paired up with USDT on the hourly chart and Binance is the data source. Now, for the most part, we've been talking about in the last video, this area of resistance just up here. Okay, and we can see that we were coming up against this resistance and we were hitting down quite a bit. Now, as I said previously, as our longer term targets are up here in this 49.5 to 56.9 cent range, that we obviously needed to push past this area of resistance and turn it into an area of support. Okay, so right now we're really pushing our way through, trying to find it as a good area of support. However, I do think it's worth noting that we also have this pocket of resistance over on this side. Historically, this is an area that we were really trying to fight our way into. Although we did get above it, we broke down from it as soon as we got through. So we want to be a little bit cautious about that, and also that this is actually going to overlap just ever so slightly with our new area of resistance down here as well. So all of this area is going to basically make it incredibly difficult for Cardano to push on through. It's not impossible, but it's definitely something that's going to be really tough to do. Now, how can I say that? Essentially, we've got more room to the downside than to the upside, okay, on the immediate short term. And I'm going to go through why I think that in a second. But basically, these targets up here between 49 and 56 cent, they're now kind of stretch targets. They're kind of nice to haves, but no guarantee that they're actually going to come on in, at least not under the current situation as it stands today at the point of recording. Things could change in the next few days. You could start to see different shifts in sentiment in the space. The momentum could shift and change, and a lot of things could unfold. But for right now, it looks actually a lot more bearish than bullish, and we should potentially be preparing ourselves for what that looks like at the moment. Okay, so let's go ahead and bring our Stochastic Rsi up here. Okay, we are seeing a bit of a push to the upside today. Okay, this is on the back, I think, of the jobs report over in the US. We're seeing a little bit of green in the market. However, this is kind of something that usually happens with the US market, a little bit of green, and then obviously it's done. Basically, it's an emotional reaction to some news, and traders can obviously capitalize in on it. And what that will mean is that profits are going to get taken. Now, not only are we in this area of resistance, where we'll obviously be fully aware that people are going to be, or traders are going to be fully looking to kind of exit their positions, we should also take a look at the Bollinger Bands. Now, we're getting a squeeze right here. Okay, this squeeze usually tells us that we're going to see a volatile movement in the market. Now, it doesn't give us direction. Now, with this particular squeeze right here, with contraction in the bands, we did actually start to see a move to the upside. So that was interesting. And now the last time we saw a squeeze like that, we actually saw this kind of move to the upside here and then a break to the downside. And there was one over this side, but we just continued to the downside. So there's no guarantee how these things play out, but I did find that quite an interesting one. We had a contraction and we moved to the upside. Now, our momentum indicator is basically saying that we're overbought. So not only are we in this resistance area, not only do we have that little bit of news about the job report over in the US kind of bringing a little bit of green into the market, but we're overbought. This is basically going to be telling us that, you know, essentially we are looking for rejection from this area on our hourly chart. Okay, so there's no hope in my mind right now that we're likely to push on through this and find those upper areas of resistance. Instead, I think these resistances are going to hold and we're going to get pushed down. Okay, now if we jump over into the 4-hourly chart, it's very much a similar story. Okay, not only are we entering into this area, this little pocket of resistance right here on the 4-hourly, and again, you can see this all historically across this entire range. Also, we're up in the overbought. Okay, so we're overbought on our Stochastic RSI on the 1-hour and the 4-hour charts as we are in this resistance zone. Okay, so not giving us a huge amount of confidence in the space. Now, if we jump up into the 8-hour chart, you bet it's exactly the same. Basically, we are up in this overbought range on the 8-hour chart as we're up inside this resistance line. So basically this this ascending triangle, a lot of people kind of think these are bullish, but then they're not generally, they're just continuation patterns. And as we look at this, we're going to have to consider that we're continuing this as an ABC structure, bringing us down lower. Okay, so that's kind of how I'm looking at this at the moment. Now, things get worse as we go up into the higher time frames. They're not exactly going to give us any kind of bullish indication either. So if I come up into our daily chart, what do we see? Well, very much the same thing. Obviously, I don't have the areas of resistance, but you can kind of see these on the daily very, very clearly. This is exactly where we are. We might have wicked above this area just here. Let me actually grab hold of this, right? But we have not closed above this line, okay? So this line here is an area that we've kind of come up to many, many times over. This is 46.58, okay? And we wick above it, but we cannot close above it on the daily chart. Now, the daily chart, the biggest bearish signal is that Stochastic Rsi has gone from oversold to overbought as we approach this area of resistance. So again, we have those higher lows and all that kind of bullish stuff, but essentially that's not bullish at all because it's just A, B, and C taking us down lower. And not only that, are we up against a resistance with the stochastic momentum indicator indicating that we are likely to go down, not up. Okay, so there's going to be some kind of trap that's going to be sprung here. There's going to be little bits of FOMO. The market's a bit of green, as everyone loves a bit of green in the market. But essentially it looks short term. Now again, we can go make it worse by coming up into our weekly time frame as well. Here you can see that we still need to pull this Stochastic Rsi down from this overbought area. So we are looking to bring this into the oversold area. And for this doesn't happen all that often, but when it does happen, usually it's pretty bearish. So let me just show you here, up in this overbought area as we're up on this range, up here on this current peak, we're up in the overbought area here. We're looking to correct down. The last time that we corrected down from an overbought on the weekly like this, we did actually drop down 67%. So we are looking for pretty significant moves to the downside now. For the first time in a little while, we are now back in the overbought area, not on the week, well, not on the weekly now, that's actually correcting down, but the daily, the 8 hourly, the 4 hourly, the 1 hourly charts. Basically, this is not looking overly good for a good move to the upside, at least not anytime soon. So let's come back up into our hourly chart. Now we have a good understanding as across those time frames what that is going to be telling us. So essentially here, guys, we're looking to close below probably the 46.58 range, keeping our daily well below that resistance line. And of course, looking for corrections. We're probably going to come down out of this triangular ascending triangular wedge, and then going to move down into new lower lows. In my opinion, it's going to be an interesting one to, I say new lower lows. I think the lows are down here at 40.19. This could be the catalyst that takes us down to at least a double bottom on that, or potentially even further. So do watch out. I've got my low targets down here at 28 to 34 cent. That hasn't changed, and for the most part, the only thing that's different here is it doesn't look right now that we're able to actually go after the 49.56 and 56.97 targets that I've been talking about for a little while. So this actually looks like we're about to break on down from this low range after this ascending triangle completes here. And yeah, it looks like the resistance is going to hold. So guys, hopefully you have found this brief update on Cardano useful and informative. If you have, hit the like button. I do appreciate that. Remember to subscribe if you're new and join us down in Discord. Links are in the description below, guys. Hope you have a fantastic day, and I'll catch you all in the next one.